We were expecting a terrible winter, a winter of recession, and also a winter of problems with energy supplies.
Yeah.
Blackouts. Indeed,
rationing even.
Yes, indeed, we didn't have recession, and we were able to go out from dependency from Russian gas in 8 months. I think amazing results. So the spring meetings are more optimistic. The issue now is how to deal with the perspective of lower growth, because we should not forget that in 2022 growth was quite high, higher in the EU than in US and in China, which is unprecedented. And this year it will be subdued. So we will have our forecast in 1 month from now, not very far from the forecast of the IMF probably. So a level of growth around 1% lower than in 2022. This is our next problem. How to face a lower level of growth with still existing core inflation.
Yeah, and I think you framed that very well, but you're also assuming that the energy crisis that Europe went through last year is over. And many people are saying, well, we were lucky because we had a mild winter. Europe was quite agile in diversifying, but China were off market. They're coming back online again. Europe will be competing against another major importer of energy as well come this next winter. To your mind, is the energy crisis over, or is every winter going to be a challenge for Europe to get the energy supplies it needs?
I think it will be a challenge also for next winter. Maybe a less dramatic challenge than it has been in the past winter, because we should remember that we had a more than 40% dependency from Russian fossil fuels, and this is now down around 7%. But indeed, we are now refilling storage starting from the end of April, and we are refilling them without Russian gas. And this is new. And the other new thing is indeed, as you said, that China reopening will or could bring the liquefied gas prices up. And so our effort to diversify through other pipelines, but also liquefied gas, could become more costly. But anyway, to put it more optimistically, I think we should say that the big challenge was last winter. Next winter will also be challenging, but we already know that we were able to do something amazing.
At the same time, it did entail a lot of fiscal spending because there were a huge amount of energy support packages that were put in place. I was just speaking to the IMF now. Both Gita and Vitor from the IMF fiscal division say that those measures would be preferable, are deemed to be temporary in nature, and that the IMF would not necessarily be supportive of a blanket continuation of energy support. They're in favor of very targeted support for those who would be most affected. What is the European Commission's perception of these types of energy support packages if indeed next winter is going to be challenging as well?
Well, this is exactly what the European Commission is asking to member states. Why? Because prices are now to the previous pre-war situation, even lower than the pre-war situation, and these universal measures are no more justified. Even last year, if we had had a more targeted measures, according to our estimate, the measure costed 1.2 of GDP. If you concentrate the same measure to 40% of lower income population, you have 0.3%. So 1.2 against 0.3%.
Yeah, that's firepower that could have been saved.
Yeah, and this is what we have to do now, to make them more targeted.
I want to turn to another topic, again, huge topic of discussion here at the IMF, and that is the banking stress that we saw emanating out of the US. The regional banks over there had knock-on effects to Europe, and then that all culminated with the takeover of Credit Suisse by UBS. European regulators, supervisors, ECB were quick to respond, but let me just ask you from your standpoint, from where you're sitting, do you feel like those events were idiosyncratic, or do you still worry about the possibility of some systemic episode in Europe as well?
Well, we don't see the risk of a systemic spillover in the EU system. We have to say that the EU system is, I wouldn't say stricter, but it is involving a larger number of banks in comparison with the American one. So our so-called Basel III rules are directed to a large number of banks and not only to the largest banks, as it is in US. But of course, as we always say in these cases, we closely monitor, which means translated that we have to look accurately to the evolvement of the situation. For the time being, I see no risk at all that this phenomenon could be imported in the EU.
Okay.
No risk at all.
That's a strong statement. So no risk at all that it could be
at
imported.
the moment.
At the moment. Okay, at the moment. One other feature of the takeover of Credit Suisse by UBS is that the too big to fail resolution mechanism was not triggered. In fact, the Swiss government did have to get involved. There are indemnities, there are guarantees by the central bank, liquidity assistance that came through. Is this going to lead to a rethink of how Europeans think about the too big to fail resolution structure should a situation arise in Europe as well?
Well, first of all, we have for European banks a different hierarchy of intervention of this kind. So an intervention like the one that was decided by the Swiss authorities with great speed and efficiency would have not been possible in Europe. Second point, the Commission is working on a new proposal of, so to say, a common crisis management framework in case of risks for banks. So we don't see the risks at the moment, but we work to have a common framework in any case.
I want to bring up another keyword that has been going around by President Macron from France, and he's been talking about strategic autonomy in terms of military and economic strategic autonomy for the Eurozone bloc, European bloc, versus the US and versus China. How likely is it that the Europeans can get to a point of actual acting autonomously, independently, on an industrial strategy that benefits Europe alone?
Well, of course, we will never put US and China in the same place. No? From one side, we are strong allies and partners. On the other side, we are more strategic competitors. But what is clear is that the European Union, keeping its model, which is the model of an open economy, should become more autonomous in industrial policies, in defense, in supply chains, because what was very clear from the crisis we were addressing in the last 5 years, 4 years, was how important is to have secure supply chains and capacity to compete in the more strategic sectors of the green and clean transition. If Europe wants to be leading in this transition, we need to increase our capacity from rare materials to renewables to electric batteries, and this needs something that in Brussels maybe 5 or 10 years ago was not so popular, which we call industrial policy. A common industrial policy is needed for the European Union.
Yeah. Before I let you go, sir, I just want to ask you one question about Italy. There seems to be a bit of a standoff going on right now between the recovery fund distribution, the Italian government versus the Commission on the distribution of those funds. Are you confident that there will be a resolution and that Italy will be able to get the next bulk of payments?
Well, we agreed with the Italian authorities to have a few weeks of delay on the third disbursement. This is not exceptional. We agreed the same thing with several other countries, including Spain, for example, or others. So what is crucial is not this disbursement that will happen. We are checking a few remaining issues, but of course the dimension of the program in support of the Italian recovery is so huge that the joint commitment from Brussels and Rome should be very, very important if we want to implement this plan. And implementing this plan is the only way for countries like Italy to have a less subdued growth in the coming couple of years. So it is really in the interest of Europe and of Italy.